Mining Network's coverage of the WNS is brought to you by GovEx Uranium.
Hello, welcome back to my network. We are at the WNS and I'm joined with Per Jander, the director over at WMC. Per, good to be with you.
Great to be here. Thanks for having me.
Why don't we, look, first time on the channel and appreciate you coming on. So why don't you just give us a little bit of background. You've got a long history of trading with Cameco, you're at WMC now, you're an advisor to Sprott. Big name in this industry, but why don't you tell us a little bit about your background?
Yeah, I was just thinking about it. I mean, this is my 20th year at the symposium, so I'm starting to be one of the silverbacks here, I guess. But it's aging myself. But it's no, it's been fun. This is like this is one of my absolute favorite events of the year, in that everybody gets together, not just the fuel buyers, but the wider industry, if you will. And it's like people have their vacations over the summer. Normal year, this year was slightly different. But it really is sort of kickstarting the fall session of contract negotiations and hearing about expansion plans that people may have. So it's a really good spot to just reconnect with people and kind of kick off whatever the activities is going to be for the fall. So yeah, I worked at the nuclear power station in Sweden for some time. That was a bit early on. That's how I got into the field. I actually worked at WNA for a little bit as well and helped organizing this thing. The majority of my career in the nuclear fuel field was with Cameco, so big Canadian mining company that most people are familiar with, in their marketing branch. So I was basically selling uranium and conversion, but also active in their trading department. And then in 2019, I joined WMC as a Dutch commodity merchant. Started in nuclear fuel, where we expanded quite a bit, and now we're also active in battery materials as well. But my focus is still nuclear fuel only, and the absolute majority of my work is with the Sprott Physical Uranium Trust, where I'm the technical advisor, which means that I basically buy all their uranium. So all the physical uranium that's stored in the trust, we buy for them, and we also manage their inventories.
Interesting. Okay, and you were mentioning there at the very beginning that this summer's been a bit different to others. Why has that been in the industry? I
mean, it started pretty exciting for us when Sprott raised $200 million in a bought deal, which we haven't really done before. So that was there wasn't a lot of buying interest going on in the market at the time, and it was a good exercise to see really how deep is the spot market and where were the pockets of uranium at the time. And pretty confident we cleared up quite a bit of that. And then in July, we saw some U.S. utilities come out for tenders for more of a longer-term contracting that traditionally we don't see, and it just shows that it is a little bit of an unusual year where people have been on the sidelines for a long time because of all of the uncertainty of trade wars and sanctions and geopolitical instability. And now it's more like when a company is ready, we don't necessarily care what time of year it is. We need to buy some uranium.
Is Sprott just buying uranium on spot, or are you also doing contracts?
No, only spots. Only when we raise funds and we have the cash, we will go into the spot market and buy. So we're not looking to sort of fund any mines or any of that. We want the drums to be out of the ground, the mining to be done already, no mining risk, and no delivery risk either. We just buy it in the can at the conversion facility. So.
Not something that you're doing, like you said, you're not funding mines and whatnot, but that is a big theme here, is that we have had an underinvestment in the uranium side, especially in the junior and exploration side. The elephant in the room at the moment appears to be that the producers are expecting one price in terms of a floor price and a ceiling price, and the utility companies are holding out. You know, what's the sort of feel like at the moment at the conference? Are you feeling as though we're closer to a resolution on that front?
I don't know if it's necessarily a resolution. It is the constant battle. Like, and you say Cameco will go on record and say that, you know, that's like, yeah, the utilities are asking for something. They say the spot price is coming down, so now they want the floor and the ceiling price to move with it. And then you're saying like, well, we'll just sit back and not agree to that. And then it's been a bit of a standoff. And I think that's starting to come to a resolution now where, oh, sure, spot price is starting to move up a little bit again, and there's only so long you can wait. And also at some point, you know, not everybody can contract with Cameco. They still are the premier choice in the market. But at some point, you either need to, well, you know, bite the bullet and accept the terms, or you have to find it somewhere else. But it certainly is a give and take. I'm not saying that it's like it is a seller's market for sure, but it's been a buyer's market for a very long time. But it's still, yeah, they're not being unreasonable, of course. But I would say people are coming to terms a lot more now. And obviously one way of doing that too is that you don't necessarily contract as much as the term price, that is what's being reported and what people can see, but there aren't that many price points, because it's simply like, if you're a producer in this market, you don't want to cap your upside and say, hey, I'm selling everything at this price. You might agree to a ceiling, but that's not, if the term price is 80 and your ceiling that you might go for is 140, there's a lot of room there, and you don't want to cap too much. So I think the majority of the contracting is happening in the space what it is at whatever the spot price is at the time of delivery, as opposed to we're setting the price at 80 and escalating it for 10 years. So that is a pretty big change. And as a price reporter, it's difficult for them, where do we peg the price? I think that's part of the reason why that 80 level has sat there, because there simply aren't any other price points.
And is this, I guess, the general nature of this market in terms of the contracting? It is quite opaque as well, isn't it? So I guess one of the things that when we were doing an interview with Rick he was saying that the spot market has almost become the spot market in a way. It's sort of seeing more volatility or more volumes. How are you looking at the influence that spot has had on the industry? Because one of the main things I was sort of mentioned to him was, obviously you're sitting there with almost 70 million pounds of uranium now. It comes in, it never comes out. Mm-hmm. As we are starting to see a tightening of supply and increased demand, especially coming out of China, which we can go on to talk about, how much of an influence can the spot market really have in driving up these prices and maybe even helping companies like Cameco in the long run achieve these higher long-term contracts?
I think we can step back a few years, and like when spot was launched, and then you have a very unhealthy market. So basically the spot uranium price was sitting around $20-25 a pound, well below what you need incentive pricing to develop new mines and even operate some of the old ones, because some of the best mines in the world, Cameco's mines, was shut down in care and maintenance as a result of that. That was not a healthy place for the market. So when Sprott came in and started clearing up this overhang, and sure, the market, there was not the only reason, but yeah, it certainly had a part in that when the price moved from 25 to 50 and even up to 70, 75, that it's a much healthier place to be. And it's like, whereas some utilities maybe balked at first, I think at least a little bit more strategically aligned ones would just realize that, well, this is a healthier place for the market. Hadn't it been for that, Cameco wouldn't have restarted their mines, the Kazakh wouldn't have ramped up their production, and it would have been a much more violent price shock. And now when the industry is doing so well as it is, with life extensions and even restarts of decommissioned power stations, with that demand more or less shock, considering how everything moves in nuclear energy, it would have been a challenge probably had not that it helped smoothing out the transition into ramping up to a much more healthier place in the market, where there is more primary production in the market right now. And I don't think it would have been the same situation without Sprott. So from that perspective, I actually think it helped out quite a bit.
Welcome to GoVX's Mutanga uranium project. It is right next to the Kariba Dam, a 4-hour drive from Zambia's capital, Lusaka. It has great infrastructure, benefiting from road access and proximity to power lines. Zambia is a pro-mining country, and we have the support of the government for our project, which is going to be Zambia's first uranium mine. Our Mutanga project is already mine permitted, and it is a simple open pit heap leach operation. The feasibility study is complete, and we have filed the ESIA and relocation plan. GoVX has recently announced a reverse takeover of Tomador Iron, which will result in an Australian listing, a new name, Atomic Eagle, a strengthened balance sheet and corporate structure in a market that knows Africa, supported by a proven uranium team.
One of the things that we've been hearing is that when you look forward into between 26 to 28 in the forward demand curve, a lot of analysts were anticipating that a lot of reactors in the West were actually due to be decommissioned. They're now looking unlikely to be. How does that change the outlook when we already have a supply tightening going on?
Yeah, it's constructive. It's the short way of saying it. Will we run out of uranium? I don't think so. There is plenty of uranium. It's just that you gotta find the price point for it, and it's not $70, and maybe it's triple digits. Maybe that's where it needs to be. Maybe it needs to be even higher. But that's why I was like, I'm not gonna say the price doesn't matter to utility, but I will say that the uranium portion of your operating cost is 5 to 10%. So you can, with electricity prices the way they're going, especially in this country, like you're fairly insensitive to whatever the uranium price is. I fully acknowledge that conversion prices and enrichment prices, so further down the fuel chain, they have quadrupled or even gone 5x as a result of the conflict in Ukraine, because Russia they're not a big player in uranium itself, but they're a very big player in the fuel services, the product that further down the chain, and that's where you've seen the immediate impact. But now that utilities immediately followed the invasion, their attention was spent on enrichment and conversion, because that's where the crunch time, and when they can't buy Russian anymore, they got to go focus somewhere else. And yeah, while the purchases are still going on today, there are rules in place in the US that there's a ban starting 2028. So you need to replace the Russian purchases with something else. That is more or less being done now. And now they can start focusing on U308. So we expect it to start to be more contracting activity in U308 going forward.
Okay. How do you see Cameco's role in this industry moving forward? Obviously, when they bought Westinghouse, they've now become very vertically integrated with the entire supply chain, right?
Yeah. Yeah, first, I'm a very big fan of Cameco. I obviously used to work there. I'm a bigger shareholder now than I was when I worked there. But yeah, they don't own Westinghouse. They have 49%, 51% is someone else. But it is obviously, for all practical purposes, yes, they're a combined business right now. And I think it was a brilliant move. Personally, I was very, very happy when I heard it, because I think Westinghouse is a great company on its own. And I think now, kudos to Cameco for the foresight of seeing that, because now you're starting to see the reaping the benefits of that, because AP1000s, like they have built a few, but there will be more built. And you're looking at what's happening in China, where they're building a lot of reactors of the same kind, and they're starting to reduce the uncertainties of the build times. It's more of a manufacturing process, and that's exactly where you want to get to. So I'm just hoping that we can get there in the West as well. And AP1000 is certainly one of the designs that we should be doing for that. And then there is a scenario where, people should never forget that Cameco is a mining company, but it's also now, it's just as much of a reactor vendor as well. And then I think it's more of a champion of the nuclear industry as a whole, and not just a mining company anymore. So, and I congratulate them. I think it was a great move. And I think they will continue to have a big impact in the market. That being said, some of the bigger mines are starting to fall off in the mid-30s. They need, what's the plan after that? And I think that's people are starting to wondering that. If they say that they're writing contracts with the Chinese until 2050, well, you don't have mines operating that far out. So where is that uranium going to come from? And I'm sure there are discussions going on in Cameco right now, like what is the plan after that? So.
Interesting. One of the other big concerns that has been raised is sort of the cost of capital, or the capex numbers for a lot of these mines. Inflation's been, I guess, in a way, it's higher within certain aspects of developing a mine than it is in other everyday life areas. Is that one of the main concerns that you're hearing around the conference, is that actually when a mine might say on an economic study that it's 5 million or 5 billion to build, it might end up being a number much, much higher than that?
I think, I don't know if it's a concern, but it certainly should be taken into account. It's only costs will go up, just as you have when you build when every mine is unique. You can't replicate, because the ore body is unique. When you build a reactor, at least, you can more or less, every site is unique, but it's not quite that, you can still replicate the building itself somewhere else. And you look at the cost overruns on the reactor. So it's only reasonable to assume that every mine operation will have cost overruns as well. But I allude to, electricity prices has gone up, and as long as they keep going up, it will forgive a lot of increased costs on the fuel side. So I'm not worried about demand destruction in the sense that, the fuel is too expensive, so we're not going to keep building nuclear power stations. I simply cannot see that happen.
And what about on the ASIC side? So a lot of mining companies that we speak to, they don't really want to build their mine until they can have guarantees of, say, $100 uranium.
Yeah.
Do you think they're going to be waiting a long time for that?
I should say, like, yeah, no, it's like I wouldn't say start digging right away, but I would say, like, considering how long time it takes to get a mine up and running, I probably wouldn't be too concerned. I think we'll get there. By the time they get into production, we'll be there. So it's
Okay, so within the next 2 years.
it doesn't take 2 years to build a mine, but yeah, I would say I'd still won't put it out of the realm of possibility. Then within 2 years, we'll be in triple digits anyway. Yeah.
Okay. And what's in your mind, what's the fundamentals behind that? Is that just for the fact that we need that incentive pricing for new supply to come online? Yeah.
I think there's enough demand increases coming forward with not, like I said, like, yeah, there's certainly new builds, even though they take a long time, but we're looking at the Chinese program, how much they're expanding. But we do have the life extensions. In any demand model, you know, they fall off whenever a reactor reaches its 40-year or 50-year lifetime, but then you add a 10 or 20-year life extensions to that. That's a pretty big chunk of demand that's hitting more or less right away. And then you have a restart, as you have had at 3 Mile Island or life extension Diablo Canyon. You have Palisades in the US. You need an initial core, and that's just not a regular reload. That's something bigger. So if that starts happening, then you even have, you know, like a fairly chunky demand hitting right away. So it's a very constructive outlook on the demand side, and we need fuel to fuel that. So it's like, yeah, we need the new mines to do that, and those mines are not coming online at today's prices.
One of the things that was mentioned to us a few days ago on the channel was that essentially the Japanese market is cannibalizing itself with leasing contracts. What do you know about the pace of the restarts in Japan and how that market's?
I think they're restarting as many as they can. Sure, it's a slow process, obviously, because they have legislation in place because they're on a seismic fault line so obviously they should be very careful about it. But they also have clearly stated that we are going to restart as many as we can, and they are. And so that's why the fuel leasing is not happening to that much extent. It was 10 years ago, yes, it did happen. Today, it's a strategic asset. And I cannot see the Japanese utilities. If you're gonna keep running your reactors or restart your reactors, you're not giving up your fuel. Some reactors that aren't gonna restart, yeah, sure, they've been selling them, but there's a finite amount of that, and they're not really growing. So I do not see the Japanese situation as having a big impact on our market anymore. It was a time for sure, but it was a very sort of a bearish impact. It's like you compare the effects of the Japanese situation compared to what's happening in China, for example. Yeah, Japanese is not relevant anymore.
Right. Yeah, we were talking off screen earlier. You were saying that China potentially should be replaced or being ahead of the US soon in terms of their reactors. They're building around 10 reactors per year for however long?
Until the end of time, maybe. I mean, it's like at least for as long as we're concerned. Yeah.
All right. So is that for you the main focus? Is really the pace of Chinese restarts is really what's driving this industry more than anything else?
No, I think just the steady demand increase has always been there. But you look at places like India, they're growing very fast as well. And yeah, now there's talk of, if there is any truth, the way there's tripling or quadrupling in the US, that's an enormous increase. Europe is doing it as well. So it's not just the Chinese, but it certainly is. They are leading the way in building reactors. But yeah, UAE, amazing program there. They built 4 reactors. They will very likely build more. So it's there's expansion going on everywhere. But certainly the Chinese shows that they're leading the way in how it's been done. The French did it in the 70s. They were doing the same expansion. You look at the expansion of the French program. It was amazing. And now today they're reaping the benefits. They have a homogeneous fleet where they can move spare parts. They can move fuel bundles between the reactors, and that's exactly what a sort of a electricity production system should look like. And I think that is the model that probably the Chinese looked at, and it's like, this is what we want to replicate, and they're doing it.
Okay. Just final question. Obviously, we're at the conference. It's still going on for another 2 days here. Are there any burning questions you have that you're here to find out?
Yeah, right now I'm looking for uranium. So Sprott's raising money. I need to buy uranium. So it's like identifying where those pockets are, and that. Personally, that's what I'm looking at. But as an industry as a whole, it's just to get to see what's like. There's a lot of utilities that are preparing to issue RFPs and come out for longer term uranium, and want to see what's happening in the conversion market, enrichment market. So it's just a very good time to reconnect with colleagues and get a feel for the industry. And I would say it's the temperature it's heating up, and it's a very constructive field.
All right. looking for uranium, it really does sound like a seller's market now, doesn't it? It has changed.
It certainly has changed, yeah. For over the last 10 years ago, it was a very different situation, and I think even the buyers would agree today that we're in a much healthier place today than we were before. So,
Well, thank you for your contribution, Bert. Appreciate it.
thank you very much.
Thank you.